If you are a non-US founder running a US company, this video could save your thousands of dollars in penalties. Hello everyone, my name is Hamid Hanif. Many founders today set up a US LLC or C corporation, work with international clients, accept online payments smoothly, built global trust. But when tax season arrives, the confusion begins. Do I need to pay US tax? Which forms should I file? Does running my business from outside the US make a difference? The biggest mistake, not paying taxes. It's failing to file the right forms on time. In this video, I will explain step by step with real examples so you clearly understand your US tax responsibilities and avoid costly mistakes. So if you are a non-US person and owns a single member US LLC, the IRS treats your LLC as a disregarded entity. This means everything depends on one key question. Is your income ECI or non-ECI? So let's have a case study. So case number one, non-ECI. If your income is non-ECI, which means not effectively connected income, you do not pay US federal income tax, but you must file the forms. Which forms are required? To file your taxes, you will need Form 5472 and Proforma Form 1120. These forms simply tells the IRS the LLC is foreign owned. There were transactions between the owners and the LLC. For example, you own a US LLC and provide services like IT services, software development, graphic design, SEO, or digital marketing. All work is done from your home country. No US office, employees, or operations. This income is considered to be non-ECI. A very important warning: if you fail to file Form 5472 plus Proforma 1120, you could face a penalty of up to $25,000 even if your tax owed is zero. Case number two, ECI income. If your income is ECI, you must pay US federal income tax and you must file Form 1040 NR. To file Form 1040 NR, you need an ITIN. If you don't have one, you apply for an ITIN along with your 1040 NR. For example, if you sell products on Amazon through your US LLC, your inventory is stored in Amazon FBA warehouses in the US. This means you have created a physical presence in the US. Your income becomes ECI. US tax becomes payable. Filing is mandatory, whether there is a profit or a loss. When a multi-member LLC makes a profit, Form 1065 is filed, K1s are issued. Each foreign member files Form 1040 NR. Each member pays US tax on their share of profit. An ITIN is required for that. For example, an LLC with two foreign partners make $40,000 profit. Each partner reports their share and pays US tax. So if your multi-member LLC is at a loss, you will have to file 1065 form, plus you have to issue the K1 to each partner. Form 1040 NR will not be filed and no US tax is payable. For example, the LLC ends the year with $15,000 loss. Filing happens, but tax is zero. Now, if you form a US C corporation, it is treated as a US company. The company files Form 1120. Tax applies only on profit. Corporate tax rate is 21%, and the owner location does not matter. It's simple. Profit is equal to tax payable. No profit is equal to no tax. Filing is required every year. For example, profitable year, you will file 1120 plus pay 21% taxes. In the loss year, you will file 1120, but tax is zero. Now let's discuss the common and most costly mistakes. Most penalties happen not because of tax owed, but because of failure to file forms. The common mistakes include thinking no tax is equal to no filing, ignoring Form 5472, 1065 and 1120, missing the deadlines, assuming your bank handles tax, not tracking US travel or warehouses use. Now, US tax rules can seem confusing for foreign founders, but remember, the biggest risk isn't tax, it's non-compliance. One US trip, one warehouse, or one wrong structure can completely change your tax situation. If you found this video helpful, hit the like button, subscribe to our channel, comment below what you would like us to cover next. Till that, stay tuned with BoostyGlobal.